So I hope everybody's doing wonderful. Hope everybody had a great weekend. Good morning, Jason. Um, Guys, my name is Mark Novak. I'm going to be walking you through the live markets, talking about rules, talking about the things that you need to get to where you want to be. Everything that we do today is going to revolve around patterns and advantages. Two words that if you're an engineer, you probably love. If you're a daydreamer like me, you probably see them in everything. But patterns and advantages, guys. We're going to look for patterns in the market, patterns in ourselves, things that give us an ability to read the charts and understand expectations, creating statistical advantages through those patterns. Um, I woke up Saturday morning. It's kind of funny. I teach the class. I trade after class. And I woke up this morning, or Saturday morning, and I just had this feeling. I was like, you know what? Go do some market replays. So I went back and I replayed 2 different days on Saturday. I replayed 3 different days on Sunday. So 5 days. I pretty much recreated the whole week over the weekend. And then I turned my brain off and I was watching a golf video. And I really do. I enjoy just watching other people play golf. I don't know why. But there's this guy. He's British. He's real popular. His name's Rick Shields. He's a golf pro. Teacher and does a lot of videos. And he said something. He was playing a match against Sir Nick Faldo, and he and Nick were having this witty banter. And Rick Shields says, the more I practice, the luckier I get. And it just stuck with me. So much that I wrote it down on a piece of paper, guys. The more you practice, the luckier you get. And I like it. It's not luck. It's because you're going through that repetition. But that's what we're going to do today. We're going to teach you how to practice what to look for so that you can take control of your destiny. We're going to keep it simple and we're going to keep it focused. But before we do anything, we're going to take a look at Forex Factory. We're going to go through, check the news, make sure that there's nothing crazy going on. We had a lot of news releases last week that were, market movers. 2 to 3 minutes of just untradeable markets. You don't want to get caught up in a whirlwind like that. So each and every morning, we're going to go to forexfactory.com. Just some tentative stuff today. If President Biden speaks and says something crazy, it may move the market. If he just speaks and says, man, there was a weather balloon that got shot down over South Carolina, not much might happen. So if he starts to speak, maybe wait a minute, see what happens. Totally up to you. What I'm going to look for are these red boxes, these orange boxes. These are high and medium impact. These are the ones that can move the market. Guys, we're not worried about what they say. We're only having that awareness that they are saying something and it may make the market go a little crazy. I'm going to show you exactly where you can find everything that I talk about. There are no secrets with Nexgen. Our number one priority is that you're successful, that you take the software, that you learn to use it, and that you create a living for yourself as a professional day trader. So everything has been made available to you, whether it is on the Discord channel, which each and every one of you should be a part of. The Discord channel has a self-training section. It has the user guides, meaning links to the website where everything that you need is right there. It has trading rules, chart reading, advanced chart reading, example trades. You could literally, if you are a self-motivated kind of person, go A to Z on the self-training and probably come out of it pretty successful if you could stay simplified. We add to that self-training 15 hours every week in this classroom, giving you live market analysis, giving you feedback on everything that you do, talking about rules, helping you create a plan. So go through Discord, take a look. If you have questions, let me know. And then, of course, off the actual website, man, running strong for a long time, we have the tutorial section. And the tutorial section is where you're going to find all those rules mapped out again. Whether it is rules 1, 2, and 3 of a high probability trend trade, creating an example trading plan. We're going to talk about that today. Entry and exit techniques, market flow analysis, HVA trades, large chart swing trading. You should. Guys, give me a Y in the room if you can hear me. All right. Thanks, guys. There we go. Sometimes that's going to happen. If you ever come in, it's after 9 a.m. Chances are I am flapping my gums. So um, reboot, come through. There we go. We'll see how that works. We'll give it just a second. Guys, everything that we talk about comes from this page. I'm going to focus on a lot in Classroom, high probability trend trades. When we put together the rules of a trade, we're going to look a lot at these high probability. And these are really trades when everything lines up, guys. Every indicator on every chart agrees for the trade. Strongest triggers, no trouble, everything that we look for. But to suggest that that's all there is would be, it just doesn't do the software justice. When you grow with your high probability trades, you're going to recognize medium probability trades. You're going to recognize trades when almost everything lines up for the trade, but a small issue exists. These have to be managed a little more aggressively. You have to be able to identify these spots. So that's exactly what we're going to do today. We're going to focus on the high probability trend trade a lot, looking for the 3 advantages that the rules provide. And what we're going to focus on is reading our charts, reading our indicators, because 90% of what you do during the trading day is really going to be reading your charts, chart reading. 10% is going to be taking the advantages provided and then turning those into one of your high or medium probability trades. But your ability to read your charts are going to teach you 3 essential elements: where the market is likely to continue, and you'll be able to use these continuation points for entries. Where the market is likely to go, you'll be able to identify profit targets, you'll be able to recognize patterns and create expectations through your chart reading. And then where the market is likely to stop, being able to identify where a trend has the potential to end. So if you will allow yourself to be brand new, if you'll allow yourself to be a student, focus on those high probability trend trades for the first 30 days. And it's going to give you the skill set you need to read your indicators, which is going to carry you not only through high probability, but also medium probability. So I'm going to shake up my routine today a little bit, guys, just because it's fun for me to get out of my comfortable wheelhouse. And we're going to look in the live market today. We're going to do more live market trading, not trading, excuse me. I don't call trades. But we're going to look for these 3 rules on 2 charts. We're going to look for strong triggers on your 13.2, no termination conditions, and then we're going to look for potential entries on the 5.1. And I'm going to go backwards and forwards, and we're just going to keep searching and talking about what the market's doing and what we see it doing. When we're looking for those potential entry areas, we're looking for fibs, mid-bands, and 1-to-1s. These are the areas that your high probability trend trades are going to come from. And then the advantages, because everything has to be about advantages, right? If you don't have a statistical advantage going into a trade, why are you going into that trade? Your strong triggers provide the advantage of momentum. No termination conditions, being able to identify those areas where the market is likely to stop and then not trading into them provides you the advantage of a clear path. And then an entry where the market is likely to continue comes from using that limit order to buy or sell a pullback. So I'm going to pull up the S&P right now, guys, and we're going to start talking a little bit about what I see. I want you to post charts in the room. As you take trades, as you have questions, make sure that you put them in the room. But I want to talk about rule number 2 first, because rule number 2 really helps you identify and keep you from trading directly into areas likely to stop the market. And that's exactly what you're seeing right here. This is what we call a termination condition. When price reaches an area, and that area, let's go to the rules and we'll look at them. Price reaches an area, meaning those price bars come up and hit resistance, just like they did in this picture here. Guys, if all of your trigger lines remain below that area, you have forfeited the advantage of a clear path. You've reached one of those areas likely to stop the market, and those areas likely to stop the market can create a reversal. And these reversals can create what we call odds favorable momentum. When your small trigger lines have broken below the large, the small, see the space between the two? Guys, this is a look, and if you go back and look only at the 13-2 chart, when there's that separation between large and small, you'll notice that the market tends to continue in the direction of the trend. When it reaches a key area, this much momentum can carry the market through that area. But when you do reach that next level of resistance, that next level of support, and your trigger lines are unable to break through, guys, this is a big red flag waving for you, letting you know that you've reached an area that may stop the market. There you go. Thank you, John. Guys, I got my helper today. So I'm going to put just 2 triggers on a 13-2 chart, guys, and I want you to look at this. Odds favorable momentum, and that market continues up. Small's above the large are wide. You see it again here. Odds favorable momentum, the market's going up. Odds favorable momentum, the market is going down. We're going to use today historical, and we're also going to use current. And we're going to recognize whenever your 13-2 chart is giving you odds favorable momentum, whenever those smalls have broken away from, accelerated away from the large trigger lines, when that space is created between the two, guys, you're looking at a look that provides you an advantage of momentum. It's a look that lets you know that the market is likely to continue in the direction of the trend. And this is the first advantage. When we talk about those rules, the 13-2 chart, straight from the picture that John just put in, it has to have strong trigger lines. These are those 3 rules. Looks a little bit nicer than mine. I like it. Thank you, John. Whoops, and I just clicked on mine and it's opening up in a different screen. Odds favorable momentum to the upside. Odds favorable momentum to the downside. Guys, give me a Y in the room if you're with me. Just using this little bit of information to identify some advantages. That advantage of momentum. And straight from, awesome, guys. I'm going a little different today. I'm getting out of my routines because I think it's fun to bounce around sometimes. A lot of you guys have seen these rules. Some of you haven't. If you haven't seen them, here's rule number 1 right here. What we just saw from the live market, just a little visual representation. When the small triggers break above the large, those large are wide and angled in the direction of the trend. Guys, this is a market with momentum behind it. This is an advantageous look. Same thing going down. We've seen this in the live S&P. It's happening in crude oil. If you commit to this look for the first 30 days, these strong trigger lines provide a very decided advantage. When your small triggers break into the large triggers, anything can happen up or down, and we call this a weak trigger look. So guys, it's straight from the educational material, but I'm going to pop the picture in the room for you so that you can find it. So we're going to do 2 things. We're going to identify momentum, and we're going to identify areas where the market is likely to stop. So we have not only advantageous momentum right here, but we also have a termination condition, and you can see how the market reacts off that termination condition. And then we're just going to go for entry. We're going to take this large chart, this broad stroke of a brush, and we're going to refine it. And I'm going to teach you guys how to study. These tails, they represent potential entries on your 5-1. These tails are going to let you know that there was a retracement or a small pullback in price, counter that underlying trend. And then we're going to use this smaller, faster chart to line up our areas for entry. So as we go through the day, we're going to identify one after the other termination condition, and it creates a full reversal. This full reversal gives me odds favorable momentum. Guys, I want to go through the process of identifying a broken area or an area with the potential to break. When both the small and the large triggers break through an area, whether it's resistance, 1-to-1s, it can be a divergence high or low, we consider the area to be broken. When none of the trigger lines break through one of these T3 areas, one of these Fibonacci areas, the area is what we consider to be a termination condition, no more trades into it. And then we have areas with the potential to break. Guys, we can use that same advantage of momentum to identify when an area has the potential to break. And when the smalls break through an area, but the large do not, notice that the smalls have gone south of that areas of support. They've begun to turn into resistance. With odds favorable momentum, if the conditions are right on a 5-1 chart, we can look for an entry. And rule number 3 has us looking for entry at areas inside of favorable large triggers. And what you're going to notice if you start to study, on the 13-2, odds favorable, you'll see these tails. Give it a circle and see how it reacts. 13-2, odds favorable, circle that tail. And when that tail comes back to an area of resistance right there inside of favorable large triggers, you have a potential entry. Same thing here. As the market pulls right back to an area of support inside of favorable large triggers, you have a potential entry. So that's what's going on in the live market. And let's just backpedal a little bit and let's go through the user manual. And let's line up those same looks with the rules that we have. So we already looked at odds favorable momentum. Rule number 1, giving us the advantage of momentum. Rule number 2 is identifying those termination conditions. Guys, remember, it just means that price got to an area, and when it reached that area, none of your trigger lines were able to break through. So we can look at these key areas. They're on the chart. They've already established. They're in real time. Blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, cyan divergence, high and low lines, even large chart mid bands if the large triggers are a full bar away. Guys, these are all areas with the potential to stop the market, and you identify them in a 2-part process. Price reaches that area of support or resistance. If your trigger lines remain above support, below resistance, you've reached an area with the potential to stop the market. No more short trades into that area. When both your small and your large trigger lines break through an area, we consider the area to be broken. If you have that odds favorable momentum, rule number 1, you can continue to look for those trades. And then that final one, areas with the potential to break. When the small triggers break through an area with odds favorable momentum, but the large remain above, we have what's called a 50-50 look. And you're really looking for perfect conditions on your 5-1 to get into the market. And then when you talk about perfect conditions, recognizing those ideal conditions to get into the market, when your rules are met on the 13-2, that broad stroke of a brush, that larger chart, you're going to identify those potential areas for entry on the 5-1. And it begins very much with a reversal bar on the 5-1. Remember, 13-2 chart, 1 bar may encompass 25 or 30 bars on this 5-1. So on the smaller, faster chart, on your 5-1, when the rules are met on the 13-2, we're going to wait for a reversal bar. And at the time of that reversal bar, we're going to identify those key areas, fibs, midbands, or 1-to-1s, and we're just going to insist that they're inside of favorable large triggers that are wide and angled in the direction of the trend. Guys, you're able to pinpoint with accuracy that area where the market is likely to continue, and since you're able to do it, you're just going to activate a limit order right at the top of that window of opportunity, and you're going to wait for the market to come to you. Remember, you have the advantage of momentum on a 13-2. You have the advantage of no termination conditions on that 13-2. And now you've identified with clarity where the market is likely to continue on the 5-1. And if that retracement comes back to that key area, back to that area of support inside of favorable large triggers, you're going to put yourself in a long trade here. Or if the market's going down, you'll have the opportunity to put yourself in a short trade. Your stop, your protective stop in futures trading is typically 12 to 14 ticks on this 5-1 chart. And it's going to go down here where the market shouldn't, below that window of opportunity. You've got your entry at the top, stop is below, and guys, this is a setup. This is your highest probability trend trade. This is a setup that has been researched, studied, and actively traded, and has proven to have the potential to win between 70 and 80% of the time. It creates a statistical advantage through the pattern presented, through the pullback, through the bounce off of the areas inside of favorable large triggers, and then being able to use Fibonacci for potential targets. Once this trade begins to move in the direction of the established trend, you can reduce risk below a reversal bar. And because Fibonacci is available, you can see where that market is likely to go. And you'll see the exact same thing here. If an entry was taken on your 5-1 at a mid-band inside of favorable large triggers, with odds favorable momentum, with the small smashing through the area and the large coming through, it was easy to create a profit target based on Fibonacci. And guys, this is a look at how you can study each and every day. Circle, your circle comes over to the entry, and then it's just a matter of verifying that the rules are met, making sure that you have that odds favorable momentum, no termination conditions in the way, and areas for entry inside of favorable large triggers. And guys, this is going to be our focus for the first 30 days, giving you these advantages so that you can go through, so that you can read your charts, and so that you can focus on the absolute best of the best each and every time you take a trade for that first 30 days, so that you can increase your ability to read your charts, so that you can go through and develop that confidence, guys. And I've created this picture. Just remember, we talked about we're going to study. You're going to be able to go back and really historically check what you're doing, what you're looking at. And this is exactly how you're going to do it. On the 13-2, strong trigger lines and no termination conditions. Rule number 2, when those rules are met on the 13-2, all you need to do is go back and circle a tail. A tail represents that potential entry on the 5-1. If your circle ends up at the area inside of favorable large triggers, you've identified the entry where the market is likely to continue, guys, and this becomes your best of the best. This is that high probability trend trade that has the advantage of everything in the way. And John says the trick is to not believe it because we say so. The trick is to go back and do market replay. Find 250 of those setups. Unless you actually take the trades, win and lose, get the feeling for doing it, it's theory. The best users of Nexgen do replay all week and all weekend, just part of the hours of replay he did, taking picks along the way as he studied. And guys, that's great advice. Used to say, I want you to do your best to disprove. Do the research, do the study, go back, circle the tails, look at the entries. Convince me that it doesn't work, and if you do that much work, you're going to put yourself in a great position to understand what's going on. 50-50 trade. Areas with the potential to break. Smalls are through, large are not. We talked about that perfect entry. Odds favorable momentum on the 5-1. No divergence, no losses of momentum on the 5-1. Guys, this is your perfect 50-50 entry. I'm going to take this picture. We're going to share it. We're going to look at it together. Because this is going to be your first medium probability trade. This is going to be the first trade that you take where a small issue exists. And I'm going to use my call out button. On my 13-2 chart, I have strong triggers. But I have an area with the potential to break, but has not broken, guys. And this is what we call that 50-50 look. Has nothing to do with your odds of success. It simply means that the smaller through, the larger not. When I have a 50-50, with a 50-50 entry on the 5-1, for new users learning to read indicators, no divergence, strong triggers, and a small window of opportunity help increase the chances of success. Good morning, Abdulaziz. Nice to see you. So guys, everybody wants to take every trade. In the beginning, we're going to focus on the highest probability, the best of the best, all those advantages in place. And then from there, going to work into that medium probability. The small issue is that the area hasn't quite broken, but it has odds favorable momentum. The smalls have broken through. Zero divergence says take a shot. And if you took a shot at this one, that same great look here, we begin to see a slowdown. You'll see that there's a divergence on the 5-1, meaning that there's a loss of momentum on the 5-1. You'll see that my small trigger lines have gone from odds favorable to anything can happen. So as this area has the potential to break but hasn't broken, you can use a smaller, faster chart to determine that that area is losing its potential to break. You have to manage these a little assertively, and it's your ability to read charts that's going to allow you to manage them assertively. And guys, we're just going to spend a lot of time watching the market today, going through. And right now we are just a couple minutes before open on the S&P. You'll notice that we did have that termination condition up at the top. We had an area with the potential to reverse this market. The large triggers haven't broken through an area yet, even though the small have. There's no agreement between the large and the small. So while the smalls are up strong and the large are down, we have this little moment of indecision, this time where you're allowed to sit on your hands, go refill your cup of coffee, and get ready for the market to open. And if I scroll over to crude oil, once again, we see those termination conditions, both top and bottom. Our job is to wait for these advantages, to wait for the advantage of momentum, to wait for the advantage of nothing in the way, and then look to catch our little piece of the trend. Here at 73.70, there's a termination condition. There's an area of support. Price reached this area. None of the trigger lines broke through, guys. We knew about this area of support long before we ever got there. We can make intelligent decisions based on Fibonacci. We knew about these one-to-ones, this area of resistance that the trigger lines don't go through. We saw this long before we got there. Price exceeds and breaks an area, comes back. That area of resistance ultimately acts as support and then continues in the direction of the trend. And now I want to come through with that odds favorable momentum, and we're going to go through and do the drill again, guys. We're going to take a look and see if there are any opportunities available this morning in crude oil. That's right around 640. If you get in the habit, just took that trade, shouldn't have, got back to even and scratched it. Which trade was that, Rob? The 50-50? Post that picture. I love it when you guys post pictures in here. Price pulls back to the large triggers, doesn't quite make it. Absolutely, I appreciate that. And guys, what I just asked Rob to do is one of the best things that you can do. Every time you take a trade, I'm here to give you feedback. Sometimes price won't reach the area of resistance inside of favorable large triggers. You have to be okay saying that's not my trade. Sometimes it doesn't make it again, and you have to be okay saying, man, They're crushing the market to the downside, and I wasn't given an entry that provided a statistical advantage to get me into that trade. Eventually, what you'll find is that if you're a little bit patient and if you become a little bit picky with what you're doing, the market's going to just magically line up for you, and it's going to give you that odds favorable, and it's going to give you those no termination conditions, and it's going to give you that pullback to an area of support inside of favorable large triggers. Your job for the first 30 days is simply to work your patience bone a little bit. Exercise your right to not be in a trade if the conditions aren't perfect for you. Exercise your right to just relax and take a minute. And I'm going to give you, while the market's doing what the market's doing, I want to share with you how you can create this awareness, how you can create this patience, and it's by setting before yourself a simple plan. This is an example of how to write a plan, guys, and all this does is it reminds you that for your first 30 days, the most important thing you can do is focus on entries. For the first 30 days, the most important thing that you can do, the most important skill that you can give yourself is the skill of being able to read your chart. So I'm going to share, I just shared this with you in the room, but I want to go through it. Come into your first 30 days and personalize this plan. Use the words my trade is. My trade is the high probability trend trade. And this is a trade that's been proven to have the potential to win 70 to 80% of the time when I learn the rules and learn how to read my charts. In order to enter the trade, the only thing I'm doing is identifying entries. The rules of this checklist must be met, guys. I have to have that momentum on the 13.2. I had to have no termination conditions on the 13.2. And I needed that area of entry inside of favorable large triggers. And if all these come together, then I'm going to enter the trade. If all of them don't come together, I'm going to sit on my hands and not take a trade. I'm going to take a lot of pictures today. You're going to take a lot of pictures today. And you'll be able to take a picture of what your perfect entry looks like. And if I click on my plan, I'm looking at, and this isn't even my chart. This is another user's chart. The first thing I notice is small trigger lines below the large trigger lines. I have odds favorable momentum, a market that's likely to continue in the direction of the trend. I have not reached a key Fibonacci area. It's all the way down here at 9110. So my rules tell me to come to my 5-1 chart and to look for a pullback to an area of resistance inside of favorable large triggers. So this picture puts it all together. It streamlines it. It shows me my rules being met. It even uses the checklist to make sure that I'm there. And guys, this one turned out to be a fantastic winner. And it meets my criteria, my personal criteria for an entry. So your job is to take this plan, steal it, make it yours. Where it says my name, put your name in there. And focus on entries. Show me every entry you take for the next 30 days so that we can make sure that you're always taking the correct trades. As you develop a plan, you'll hit that medium probability, that 50-50 trade. Go through the same process. This is what has to happen to get me in. And then ultimately, when you learn to read your indicators, you're going to be better suited to manage your trades. This example plan provides you a very mechanical approach to it initially, keeping the fear, the emotion out of it. And then you'll go through and you will build on that mechanical plan, guys. And this all comes together and kind of gets sealed up on this trade tracking sheet that Nexgen provided you. This is your path to being a confident trader ASAP. Take trades every day, simulate every day. Try to follow rules. Ask questions every day. Post your trades in class every day. And then everything that you do, put it in that spreadsheet so that you can begin to recognize those patterns that give you an advantage. And on that spreadsheet, let me get back to it, your trade tracking sheet, every trade you take goes on this sheet. How did you do? What did you do? How did you feel? And you can come back and study this every morning and put yourself in the position to do better the next day. When you learn to recognize that high probability trend trade, you can start to fill this section, this green section, my personal trade setups. What's it going to take to get me in the market? As you work on management, as you recognize patterns, there's spaces for all of these. And then Nexgen gave you a lot of client trades as well, a lot coming from our clients, pictures of those high probability trend trades as you begin to study, pictures of the next trade, high volume area trades, things that will help you manage, chart reading things, even termination conditions. All of these are provided. They're already there. They're in your Nexgen study folder. And your job is just to fill it out, to create those patterns, to post in class, and to make sure that you're comfortable with everything that you're doing. And then I'm going to give you this image as well, straight from the educational room. We're going to learn those trigger lines of Fibonacci rules when it's okay to trade. Simulate daily. Don't practice the wrong rules. Make sure that you're focused on the best of the best. Present them for feedback. And study, repeat every day until you're always taking the best trades. And guys, the second half of what we do in class is looking at what you're doing each and every day. So I'm going to scroll up and I'm going to find some of these trades that you guys have posted. Joel F. was nice enough to give us one here first thing in the morning. Those are going huge. He's looking at the exact same checklist that we talk about. Is the market coming from a good top or bottom? Was there a termination condition that created that full reversal? Smalls above the large are wide. They're angled in the direction of the trend. His rule number 1 has been met. Hasn't reached an area of resistance. His rule number 2 has been met, or at least deleted off of his 13.2 chart, Joel. Area for entry inside of the 5.1, absolutely below the area, and the market comes up. Joel, got to get up pretty early to pull the wool over my eyes. Great looking checklist. I like what you did, and when you're trading into a termination condition from an area not inside of favorable large triggers, these slowdowns on the 5.1 will help you identify when it's time to jump ship. That's that management part. Luciano going the other direction. Smalls below the large are wide. They're angled in the direction of the trend. This is the exact one that we spoke of, right? Odds favorable. Area with the potential to break but hasn't broken. Luciano recognizes it. So on his 5.1 chart, no divergence. Look at that picture perfect entry, guys, like a sniper. 41.1850. He takes 3 points down here. He gets 1.5 points on this contract. So 4.5 points total over the course of about 6 minutes. About $200 in 6 minutes. And then when this divergence prints, when this slowdown happens on an area with the potential to break, Luciano uses that chart to understand that it's time to exit the trade. John Horde, let's see where you're going. 847. Kind of hard to tell what you did here, John. You say good top on the 13.2. I've got to make this smaller. So you're talking about a mid-band on the 13.2. Your trigger lines roll. It's hard to line these up to see exactly what you were doing. But what I do notice is that you've got odds favorable momentum, that you've pulled back to an area, that you have odds favorable momentum. And it looks like you were able to take profits on the way down. A little more chart reading than high probability trend trade, but nice job. As you grow with the software, you're going to put yourself where you start to feel comfortable with certain looks, where you start to feel comfortable creating your own set of rules. That example plan that I gave you in the beginning is really just a way to get you reading your charts. Rob A, let's see what you said. This is the one you said that you needed to wait for the final bar on the 13.2 to close. Came back and dumped it. So let's just go through the rules. I like it. Not a possible term, Rob. You identified that as an absolutely amazing termination condition. And let me show you why. And if you're brand new, make sure that you're with me on this one. How do we identify a termination condition? Well, the first thing that has to happen is price reaches an area, meaning that Rob's price bars came down. They reached that area of support. They reached that area of one-to-ones. And guys, absolutely none of his trigger lines are able to break through this area. This is, without a doubt, a textbook termination condition. And a textbook termination condition has the potential to stop the market. The market may reverse, and sure enough it does. Those large triggers roll over. Small triggers get above the large. So Rob, so far, identifying the termination condition, I like it. Small's above the large, I do like it. And then you enter right at that area inside of favorable large triggers. And Rob, I'm going to give you a little bit of chart reading on this. This is going to help you and it's going to carry you to that next level. What you're looking at on your entry right now is these trigger lines are just a little bit split. See the gap between the two? So when we talk about those favorable large triggers, when we go back to the absolute best of the best, we want them trending one on top of the other. And when you have this split trigger look, it creates a little bit of a challenge. And that little bit of a challenge begins to compound a little as those large triggers haven't quite started up through the area. We've reached a mid-band. Feed and audio cut out. Are you back now, Rob? Okay, cool. So we'll go through it again. Rob, amazing recognition of a termination condition, right? Watching the trigger lines roll, watching the momentum begin to change direction. This was a great read. Price comes up and reaches that mid-band. And when it reaches that mid-band, notice how your large triggers are all the way down here at that reversal bar marker. This is a great patience piece, guys. This is that, and we talk about it most every day, this is that gap theory. When price accelerates away from those large triggers, it tends to snap back. We can identify if it's accelerated far enough and fast enough. Trying to make this a little bigger. It's not working. If your large triggers remain down here at that reversal bar marker, we hit a mid-band, a Fibonacci area, price tends to snap back, and you can see that it did. And just what you were talking about here, Rob, you can create that expectation that it may hit these synthetic triggers. You can put your stop in the right place if you're looking for that opportunity. I think it's a great read. But I also think that if you are brand new, if you're on simulator, if you are learning to read your indicators, take that loss, Rob. Just take your entry and let it do what it's going to do. And then take that picture and let's talk about everything that happened. Because what you're doing here is you're already creating this scenario where it's okay to respond to fear. Where it's okay. Yeah, definitely be on sim. So don't be afraid to lose money on simulator, Rob. Blow that simulator account out. If every time you take a trade, you post it, right? Every time you take a trade and you're learning those rules, post it. It's okay. If you're watching crude oil right now and everything is below resistance and you take an entry right here, no matter what happens next, either take your loss, take your winner, but post that picture and put it in the room and say, hey, Mark, I took this trade. It didn't work out. Give me a little feedback. Let me know what you think. What do you see? And then the flip side of that is you guys let me know what you were seeing. Because you didn't wait, you'll take losses with stops. Awesome. Right on. So Rob, you're already policing yourself, and I like that. If you write your rules on your chart every time, and you use the checklist, which I love, write your rules. This is what I saw. This is why I did it, right? Does it fit the rules? If it fit the rules, well, then I know that I have a trade that typically wins 70 to 80% of the time. If it didn't fit the rules, I have to be able to identify that so I can learn how to trade those rules better. And that's all we do in this classroom, guys, over and over. What we see, whether or not it provides advantages, and does it meet our rules. So I'm going to go up, take a look at the next one. We saw Luciano's great trade. John, we saw yours. Absolutely. Rob, we saw yours. I thought I had another one in here. Maybe it was below yours, Rob. There we go. Ron C. Ron C showing us what can be done with the software with a little bit of understanding, right? Ron C showing us that consistency yields dividends. And I want to show you what Ron's doing here. Give me a Y in the room if you recognize. On his 13-2 chart, Ron has strong trigger lines. Small's below the large are wide. They're angled in the direction of the trend. Ron knows without question that this is the best of the best look for a market that's likely to continue in the direction of the trade. Ron's adopted a trading style that says when I have this much momentum, I let the areas clear and I just ride that momentum till it starts to go away. I love this trade. I actually, Ron, one of my market replay days this weekend was going through and practicing this one. And there's more to it than just the simplicity. But each and every trade Ron takes looks exactly the same. He's written a plan, he follows a plan, he's consistent with the plan. And that's why it's yielding results, without a doubt. But that was fun for me to try. I was like, I don't have any rules, but I see what someone else is doing, and I want to see if I can do what someone else is doing. Guys, once again, price reaches a key Fibonacci area. Here's that gap theory one more time, live in the market. Price comes all the way up to resistance, all the way up to a mid-band, 1-to-1s. As how many trigger lines have made it through that area? 0, right? No trigger lines through this key area. Guys, this is an area that may stop the market. I can identify that with rule number 2. With that gap theory, with these large triggers all the way below this reversal bar marker, I can also identify that price is likely to snap back and smash into those, which means no long trades in this area, in this vacuum as price gets pulled back. As this is a look that you're going to see over and over. And look how price reacts. The large triggers remain down. They're a full bar away. And you can see that that downward pressure is pushing it right to them. Guys, this isn't setting up a trade. What this is doing is keeping you out of a potential loser. If you're saying to yourself, hey, look, here's a mid-band up top. I'm going to take this trade. You can identify through patterns a market that's likely to close that gap to the large triggers. Whoops, sorry. And sure enough, it does. And that's crude oil. We'll go look at S&P for a second, guys. There's that termination condition. Let's circle some tails just to gain familiarity. This first one, as it trades into support, termination condition, no entry. But if you're a little bit patient, those small triggers smash through the area of support. The large triggers are down and strong. You have a pullback directly to resistance inside of favorable large triggers. If you've gotten to the point in your chart reading, then you begin to understand the advantages of momentum And then guys, you're able to be able to identify that area where the market is likely to stop when we talk about those termination conditions. Once again, termination conditions are areas that may reverse the market, but they're also areas that may stop the market. When price reaches one of these key Fibonacci areas, whether it's support or resistance, there's another green box. You can identify these key points in the market that are likely to stop it, that are likely to reverse it. And you'll notice over and over that these patterns repeat themselves. So you can use it as a study tool to go back. Maybe today our study is on termination conditions. Price pulling back to resistance. All the trigger lines remain below. Not looking for long trades. Support breaks. All the trigger lines below. You'll notice that that support begins to act as resistance. Termination creates a bounce. No more short trades until it breaks. And then when it breaks, support begins to act as resistance, guys. And you're going to go through this pattern each and every day, waiting and learning to read those indicators. This is your S&P once again. Another pattern we can recognize is that when price turns and hasn't quite reached that key Fibonacci area, very often you'll watch it pull back to support. You'll watch it pull back to mid bands. And you'll see a potential continuation to get to that next key area. So while Fibonacci allows you to recognize the path, the key is to make sure that the path is clear. The key is to make sure that the momentum is present, that the advantages are there. And John posted a picture in here. When you begin to see termination conditions on every chart, larger reversals are very possible. When we talk about the high probability trend trade, initially it's a 2-chart process. It is a 5-1 chart, refining entries. It's a 13-2 chart, creating opportunities at general temperature of the market. And then guys, as you grow with the software, you may add an 8-range chart. And this is one of the study things we did this weekend as well. Guys, this is what you call a market flow chart. I love using a market flow chart to gauge momentum. You can see where those circles came up. Notice the odds favorable momentum on my 8-range chart. This is another just multiplier of advantages helping you out as you come through this way. Now the smalls are breaking above the large are wide, they're angled in the direction of the trend. If we work backwards, you can see that the market's pulling back to an area inside of favorable large triggers. You can see that the large are up, the small are above. We have an area with the potential to break right here. Window of opportunity is from the highest point of support to the lowest point of support inside of favorable large triggers. When those trigger lines are split a little bit, your window becomes a little bit larger. Your stop placement needs to be a little bit longer. And you can see that price just retraced right back to the bottom of that window. And with an area with the potential to break, they chose not to break it this time. We don't get to control that. We only get to wait for advantages. Guys, I'm going to take just a minute. I'm going to leave you with the S&P. 3 divergences in the same location. If I go back to my rules on termination conditions, guys, this is a very powerful one. Any third divergence in the same area, any 3 losses of momentum in the same general area may terminate a trend. Becomes even more powerful when that third divergence from a high is lower than the previous. 3 divergences in the same general location may terminate the market, may push it lower. constant state of chart reading. Guys, I'm going to pause for just a minute. I'll be back, and then we will get into the second half. If you take a trade, pull the trigger, take a picture, put it in class. If you have a question about chart reading, post it in class. If you have a question about the rules, post it in class. Post your pictures, post your questions, and then I will be back in just a few. And what I want to do with hour two, once again, termination condition. Termination again, coming off the bottom, guys. Look at how price continually tries to push through. Notice how price is unable to break through this very clearly defined area. We're going to do two things. One, I'm going to talk about our place in the market. And I want to go back and review on rules real quick. And I want to do a quick little 15-minute synopsis on the three rules, one after the other. And then I want to go to the live market and I want to see where those rules have been met or have not been met and create that awareness. Because remember, it's that chart reading that's going to give you an advantage. It's that chart reading that's going to allow you to see your indicators, to understand your indicators, and determine that there's a good opportunity for you to get in or not. But I always like to post this picture when the market's doing what it's doing. Guys, it's Monday morning. They're working it out. Think of two people in the market. There are sharks and there's remoras. The sharks are the people that move the market, that create tops, that create bottoms, the people that really push it in one direction or the other. They know where these Fibonacci areas are, guys. There's no doubt in my mind. And if you watch how the market bounces off of these key fibs, you'll understand that they do, in fact, know where they're at. We can use that momentum indicator to determine whether or not the areas are going to break. But these guys determine the tops. These guys establish the momentum. Your job is to be a remora, is to jump in and just take advantage of what these guys have provided. So I bring up that because I want you to see what's just happened, what's happening on the S&P. Your buyer sharks pushed it all the way up. It couldn't reach that key area. And your sellers fought back straight to Fibonacci support. And then you see the struggles. Buyers versus sellers versus buyers versus sellers. You can begin to identify key areas likely to hold based on trigger lines. And guys, once you get this odds favorable momentum potentially, if I get odds favorable momentum, if I get an entry on my 5-1, I can establish through expectations that those buyers are going to be very interested in reaching that next key area. Good morning, Dab Chain. Because they do know where these areas are. They do understand Fibonacci as well as Nexgen provides it to you. And guys, here we go. Couldn't make it. They're fighting it out. And now the pressure's back on the buyers. But you'll notice they're right into that line of sand. You can identify that line in the sand before we ever get there. 41.29 is an area where the sellers have said, I'm going to put up a fight. We've already stripped momentum from you guys once. We may do it again. So Nexgen users, you can identify this is a potential termination condition. This is an area that if you let it break, you establish the advantage of a clear path. Understand your place in the fight. You don't have to be first. You just have to be consistent. And that consistency starts with three simple rules on two charts. Less seafood. Guys, rule number one. Rule number one says that I must have strong trigger lines, right? Rule number one says that I have to have smalls above the large. The large need to be wide, angled in the direction of the trend. Smalls need to be below the large are wide. They're angled in the direction of the trend. Guys, this strong trigger look is the precursor for everything that I do, banking on this momentum, because when I lose momentum, I lose the advantage. Anything can happen. So give me a Y in the room if you're with me, guys. I know that I've kind of gone a little bit all over the place today, but we are going to focus 100%, make sure that you're good. Odds favorable. Guys, this starts everything for me. This gets me on the right path. And then I have to make sure that I have that clear path, right? No termination conditions, making sure that I have not reached one of these key areas, support, resistance, one-to-ones, divergence highs, divergence lows. We've been watching these termination conditions work all day long, developing trust. And remember, it's that simple recipe. This is my favorite picture for it. Price reaches resistance. Trigger lines remain below. No long trades. We've given up the advantage of a clear path. Price reaches support. All the trigger lines remain above. Once again, we've given up the advantage of a clear path if we take a short trade. Do you guys recognize that gap theory happening here? Price accelerates away from those large triggers and they don't follow. There's room for a full reversal bar to get back to those. Any short trades in that area are like trading directly into a vacuum. Price reaches resistance again, a magenta divergence high, and absolutely none of the trigger lines break through. Guys, this is an amazing termination condition. It's what we call a pivot stop out. You can look for bigger moves when price begins to trade below, when you get that reversal, when you get odds favorable momentum. This strong top, this termination condition creating a full reversal, sets the stage for the highest probability trend trade that you can take. Same on the bottom. Even with odds favorable momentum, when price reaches one of these key areas, none of the trigger lines break through, guys. No more short trades. Keep yourself safe. Insist on the advantage of a clear path, and look at the bounce it creates. It comes back down, but it creates a bounce that if you're a trend trader, you probably lost out on that position. A little bit of patience because we can identify the termination. The termination creates a full reversal. The full reversal ultimately gives me a clear path and odds favorable momentum. And there's one of those circles. There's that highest probability trend trade, and it takes you all the way up to that key Fibonacci area. This is your best of the best scenario for that first 30 days, teaching you to read all these indicators. And then that final one, 3 divergences in the same location, you're going to see it on small time frames first because we're going to be able to refine the broad strokes of a brush. You're going to be able to recognize 3 losses of momentum identified through the negative number, through the divergence line. May terminate the trend. It becomes even more powerful when the small trigger lines work their way inside of the large trigger lines. Because remember from the trigger lesson, we've gone from odds favorable to anything can happen. When that third pivot is higher than the previous or lower than the previous, we get a head and shoulders pattern, just adding fuel to the potential. Guys, you're going to use this to identify a market that may reverse to keep you out of a high probability trend trade. These slowdowns on your 5-1 will help you identify change on the 13-2 that you can't see happening as fast. But as you work into medium probability trades, you'll also be able to use these divergences to help you identify when it's time to manage out of a trade. If you took the perfect entry right here at 1-to-1s, right at the mid-band, 3 divergences in the same place let you know that the party's over, that it's time to exit that position, take your profits, and sit on your hands and wait for the advantages to be present again. So give me a Y in the room if you're with me, guys. Termination conditions. They may reverse the market, so you're going to insist on the advantage of a clear path. Guys, you can identify it long before you get there, and you can identify it in the moment, and you just have to study them a little bit. And then finding that perfect entry, finding that best of the best, that area where the market is likely to continue. Remember, when the rules are met on the 13-2, your 5-1 is going to be absolutely screaming in the direction of the trend. Strong triggers, no termination conditions, and you're going to focus on those large triggers, one on top of the other, in the areas that may fall into it. And then on the 5-1, you're going to wait for the reversal bar. That down bar after all the up bars, that up bar after all the down bars. Create your window of opportunity from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. With the momentum on the 13-2, remember it's a freight train headed in the upside. You're going to activate a limit order at the top of your window because we're not expecting a deep pullback because we have all that momentum. And you're going to patiently wait for the market to come to you. If it does, you're long with the advantage of momentum. You're long with the advantage of a clear path. And now you're long with the advantage of having entered the market at the area where it's most likely to continue. Your protective stop where the market shouldn't go. And guys, 70 to 80% of the time, this is your best potential outcome. So I'm going to ask one more time. Give me a Y in the room if you're with me. Entry conditions. All of these come through study. And you're going to study these entry conditions, guys. Let me give you the picture. When the rules are met on the 13-2, circle the tail. When the tail presents itself at an area inside of favorable large triggers, you know that your rules are met. This is your first 30 days. This is what's going to teach you to read your indicators. This is what's going to set you on the path for long-term success. And guys, I know that was a pretty quick little recap, right? We went through the rules. We talked about them. If you come to the Nexgen YouTube page, I just want to make sure that you know about these. The first hour of almost every one of these videos is a lengthy recap on the rules. Go through them, and if you have questions about any rules, I always want you to ask here right in class because I want to make sure that you have clarity as you go through the education process. Safia, let's see what you did. All right, I'm going to zoom this out a little bit. All right, so one of the things that we do, and I like this, I love this picture. There's two things that happen when you present a chart, guys. The first one, because you've put your rules on the chart, is I'm going to compare what you've said to what's happened. And I do this not to tell you that you're wrong if you've made a mistake, but to help you identify potential things that may be going on. So Safia, there's your good looking bottom, right? That's your strong support, creates a full reversal. Certainly a great termination condition creates a full reversal, very much a strong bottom. And guys, I'll annotate your charts for you as well. And then we reach, Safia, you're missing a midband. No, you're not. There it is. Price comes all the way back to support. And there's that full reversal again. So Safia, I would change weak to absolutely strong. That's a great looking termination condition that creates a full reversal. I like everything that you've done here. What we don't have is, remember, rule number one is odds favorable momentum. And what does that mean? That means that the small have to be on top of the large. That the large are wide, the small are above. Here's your odds favorable momentum. What you have here, Safia, is the small below the large. It's on the wrong side. Do you recognize that? But what you've done is you've taken a great termination condition from a key area. You've let your trigger lines roll on your smaller, faster chart and looked for an opportunity to catch the reversal, and you managed it absolutely beautiful. It didn't pass the fib, so it's absolutely. You don't have the momentum yet, but notice how your large triggers have gone from red to green. Notice how your small triggers are above the large, and you just take a pullback right to that area. It's not a high probability trend trade. This doesn't really work out so much, but Safia, this is amazing chart reading based on a termination condition that's reversing the market using the small chart. Keep taking pictures of these. It's a great chart read. It's not a high probability trend trade, but everything doesn't have to be a high probability trend trade for the rest of your life, does it? Your ability to read your indicators are going to create opportunities, and you took advantage of that one. Very nice, as evidenced by your P&L there. Nice job, Safia. These are always big moments for me. When I see you 30 days in, 35 days in, and I recognize that you're beginning to learn to read your indicators, that you're beginning to make decisions based on what you see, because you saw the changing. But remember, rules met or rules not met. It's okay to take pictures of everything that you see and create a set of rules, but keep it on there. Steve B, nicely done. Let's look at Steve B's. Small's below the large, right? No termination conditions. You take a perfect pullback to an area of resistance inside of favorable large triggers. Steve B, perfect entry on what looks to be a high probability trend trade. And then we get that higher divergence. Those small triggers in gives you an opportunity to manage out. You take $100 on your first. You get to zero loss level. Great job identifying change, managing out of a trade that had the potential to go, and it just chose not to. Steve B, great management on a perfect entry. And those perfect entries make it so much easier to manage trades, don't they? Look at these termination conditions up top now. That magenta high, twice they tried to make it happen. Guys, you're watching a fight here. Support's held, hasn't it? But hasn't resistance as well. Are you guys with me on what we're seeing right now? The market is creating this box. There's a fight between buyers and sellers. How amazing is it that as a Nexgen user, you can identify the range that the market's stuck in? You have rules to establish momentum. You have rules to establish a clear path. And only when those rules are met can you begin to recognize the advantage. So now we have that termination condition. It is creating the full reversal. And guys, look at this. Smalls have smashed through. The large are working down. This 41.21 is an area with the potential to break, but it has not broken. I can identify areas of resistance inside of favorable large triggers, can't I? And because I can do that, I can wait for the market to come back to me. Well, and then it went right to those one-to-ones, which means that I'm waiting for this area to clear now. Did that make sense to everybody? In the moment, you can identify the momentum. You can identify when the areas are clearing. You can identify when an area has been reached. And even if we pretend for just a second these one-to-ones weren't present, guys, you can identify that area of resistance inside of favorable large triggers, can't you? And if you can't, raise your hand. Let's talk about it. Let's make sure that you're comfortable getting to the point where you can. Because everything we do is a progression. Smalls below the large are wide, they're angled in the direction of the trend. Odds favorable momentum. One loss of momentum, two losses of momentum, three losses of momentum, and then a higher pivot with a loss of momentum. Guys, if you remember your 5-1 chart, using divergence, using three divergence in the same general location, can identify change before it happens on the 13-2. Odds favorable, the 5-1 says that we're probably going to push up further. And it pushes all the way up to a midband. Everything remains below resistance. And look at your large triggers, guys. They never came along, did they? They remain more than a full bar away, and price accelerates and smashes directly into those things, right to the next key area. This is a pattern recognition tool. This is something that's going to help you out every time you see it. Every time you see those large triggers a full bar away and an area was reached. You don't, Rob. It's not a trade. It is an observation to keep me from trying this long. It's just a pattern. One thing some people will do, and let's see if I have a 21 chart. Are you ready? Remember, I'm starting you on two charts, guys, 13-2 and a 5-1. This is a higher time frame. This is one frame up. Just like the 5-1 is to the 13-2, the 13-2 is to the 21. So guys, if I have odds favorable momentum on a 21-3, I can go through that exact same process. I'm going to circle the tail. on a 21-3 chart. Is everybody with me on what I'm doing right now? We're taking the exact same indicators, but we're just going up a level. Maybe you're looking for bigger moves. Maybe you don't want to be in and out of the market so much. So here is my circle on the 21-3 with odds favorable momentum with no termination conditions. Are you ready? My circle lines up with a midband on the 13-2. When I reach the midband on the 13-2, the large triggers are a full bar away. So the 21-3, I love doing this. The 21-3 says that the overall temperature of the market is down with momentum with absolutely nothing in the way. If I drop a level, the 13-2 says that this area is likely to stop the market because of the trigger line position. So Rob, are you with me? I'm not telling you how to get in, but I'm telling you how you can create a plan to get in. My 5-1 suggested that I would push up to that key area. And when we reached it, 1-to-1s formed. So guys, now I can add a confirmation tool, a market flow chart. And I can say, whoops, if I get a reversal bar from that area likely to stop the market, as evidenced by the 13-2 in relationship to the 21. So Rob, understanding this pattern in conjunction with understanding odds favorable momentum and being able to identify maybe a close below that immediate momentum indicator creates a pretty awesome trade, doesn't it? It's a little more advanced. But guys, it's the patterns that I teach on the 13-2. It's the patterns that you recognize on the 13-2 chart going in line with the 5-1 that'll translate to higher time frames. It'll translate to other charts. Momentum is momentum. Smalls outside of the large mean that you have a market likely to continue in the direction of the trend. When you have it on a higher time frame, it translates well to the smaller time frame. If you have it on your highest time frame, it translates well. What do we notice about the triggers on the 21-3? They've gone from outside and now they're beginning to return. But they're still odd favorable here. Change happens slowly on a higher time frame. Change comes about faster on the smaller time frame. That's why we use these refining tools. And guys, if you're using an 8-range chart, I'm just doing chart reading today. I hope you guys are okay with that. This is an 8-range chart. And I'm going to do something real quick. I'm going to put nothing but trigger lines on an 8-range chart. And I want you guys to see this pretty amazing phenomenon. This was some of my study this weekend. Nothing but triggers on an 8-range chart. When I have odds favorable momentum and a pullback, just like I see on a 5-1 trend trade, the market continues down. The trend changes, things go sideways, smalls above the large, it goes up, closes below, reverses. There's one of our circles. The market pushes down. Guys, you're going to see this momentum on an 8-range the same way you'll see it on a 5-1, the same way you'll see it on a 13-2, the same way you'll see it on a 21-3. So if I have odds favorable momentum on my 8-range, and I couple it with odds favorable momentum on my 5-1, and odds favorable momentum on my 13-2, well then I can say that because rules 1 and 2 are met, because rule number 3 is met, area of resistance inside of favorable large triggers, and then I can go through and I can identify my area of resistance inside of favorable large triggers. And guys, I can feel as though I have a statistical advantage. I have the advantage of momentum, the advantage of a clear path, and I have the advantage of a market that is identified through resistance inside of favorable large triggers where it's most likely to continue. And remember that this is a setup. This is a set of rules that typically wins 70 to 80% of the time. Let that sink in for a second. This is a set of rules that typically wins 70 to 80% of the time. Embrace these rules in the beginning. Embrace these rules, embrace this path, embrace this simplicity, because it's going to be this set of rules that teaches you to read your charts. Guys, those strong triggers, those Fibonacci areas are going to show you where the market is likely to go. Your 5-1 is going to allow you to see where it's likely to continue. And then guys, using those higher time frames, using those multiple divergences are going to make it where you can identify where it's likely to stop. Your ability to read your charts creates a statistical advantage. Guys, didn't make it back to us, did it? But let's not focus on it not making back to the mid-band. What happened after the pullback on the 5-1 with odds favorable momentum? Did the market go up or down? It depends. If my rules are still met, Josh, I still have odds favorable momentum. I still have no termination conditions. And I still have an area of resistance inside of favorable large triggers, don't I? I don't even call it chasing. I'll keep waiting. And if a retracement happens, I am more than willing, because my rules are met, to take a trade. Let's see what happens. Does that make sense, guys? All we can do is stay in control of whether or not our rules are met. All we can do, if you were in at 73 at that mid-band, you've already got a reversal bar. Guys, you've got 2 ticks of risk on this trade. If you're doing a very aggressive, take $100 and then get break even, you've already got $100 in the bank and a break even stop. You have the advantage of momentum, the advantage of a clear path. You had already entered, you had already exited your first contract. And now you're just waiting to see what the market does. It may go and it may not go. But guys, that was 100% rules based. And when I talk about that conservative management, trade 2 contracts, this is that mindless, no anxiety, no fear, no opinion. Clearly define your management plan. Walter, are you watching me on YouTube or are you watching me in Discord? Is anyone else getting an echo? Just fuzzy? Okay. If you're watching both, Walter, then there's definitely going to be an echo because YouTube has a tiny little delay. Guys, I'm going to unplug my microphone real quick and plug it back in and just see if that helps. Whoa. All right, I'm trying. All right, coming back. I did a full reboot on that one. Good. 5x5. Okay, awesome. Sorry about that, guys. Man, happy Monday. The cool thing is, if that's as bad as it gets, we're doing just fine, right? Hey guys, there was your high probability trend trade, wasn't it? Odds favorable. No terminations. All right, dab chain, you ready? John, it shut down on that YouTube. And I don't know that, let me end it.